Fisker Incorporated, ticker FSR, reported a mixed quarter in which outlook was upheld, targets were maintained, and progress was reported, and all in the face of a 28% short interest. Relationships with manufacturers like Foxconn give substance to the promise of future revenues above and beyond the company's core business. By our calculations, this company should start bringing in money by late next year, and could easily surprise the market with its initial strength. Fisker's Q1 report is more of an update on operational progress than anything else, and by all accounts the updates are good. The only bad news is the Q1 GAAP loss widened to 63 cents and missed the consensus by 46 cents. This is due in part to the recently announced PEAR project with Foxconn, as well as increased spending in the build-up to Ocean production. To that end, the company raised its full-year guidance for operating expenses by $30 million to include the cost of PEAR, which is already deep in progress and expected to begin production of its vehicle by late 2023. In regards to the company's flagship model, the Ocean SUV, Fisker says it is on track to begin deliveries late in 2022. Recent activities include material sourcing, price visibility for materials, battery suppliers, and realization of cost synergies across the Ocean, PEAR, and FM29 platforms. The company also revealed it has more than 16,000 reservations for the Ocean, which is quite a feat considering how long it will be until deliveries begin. In addition, the company reports interest from outside the traditional SUV market and suggests its addressable market may be larger than anticipated. Looking at the company from the balance sheet angle, it appears to be well funded and has virtually no debt to speak of. The company reports $985 million in cash and securities, which is down only $6 million from the end of the year, and there's more. Fisker reports it has redeemed all outstanding public warrants on a cashless basis. The redemption resulted in 3.6% dilution, or about half if redeemed for cash, exhibit the company's faith in the balance sheet. The analysts community is generally bullish on this stock, but there are a few bears out there still. Of the 11 current ratings, there are 2 holds and 2 sells, but nonetheless, the consensus estimate is well above the current price action. At $26.30, the consensus target implies more than 125% of upside potential, and we think this target will ultimately prove to be too low. There's been no chatter since the Q1 release, but we think it's only a matter of time before the consensus rating and price target begin moving higher. Price action appears to be at a bottom regardless of the potential for a short squeeze. The stock is trading above a potentially strong support level at the $10 range and moving higher in the wake of the Q1 report. The indicators support the idea of higher prices, as they are consistent with support and showing a bullish entry signal with today's action. While we can't say short covering will start for sure, we can say it looks like this stock will at least retest the $13 level near the short-term moving average. If price action gains momentum or moves above the EMA, we just may see a very strong short covering rally begin. Subscribe to my channel to be up to date about crypto and stock investment. See you soon with my latest crypto analysis. Have a great one.